Okay, welcome to today's session. We're going to talk about trading high reward, low risk trading setups. So what we're talking about here today is a very simple and naked way for you to get into trades. So thanks a lot for spending time here. If you have any questions, you can just type them in the chat box. I'll try to get to all of them. Remember, so my name is Walter Peters. I wrote the book called Naked Forex. I know some of you may have read it. If you like that style of trading, then that may be why you're here. I'm not sure, but let me show you. Whoops. The book's called Naked Forex. It's about trading without indicators. Okay, that's really what this is all about. It's about how can I find trading setups without having to rely on indicators, which are one, lagging, and two, based on all of the information that you pull off of candles anyway. So every single indicator you can get out there is based on either the open, the low, the close, or the high, or some kind of formula jumbles up all of those numbers. So when you're trading with price action, when you're trading with simple naked strategies, you're really trading with the same information that you use with indicators. You're just getting them from the candles. So today what we're going to talk about is something really cool. This is probably one of my favorite ways to really build up an account. And it's what I've been doing a lot of lately. It can be frustrating. I'll show you why. But it can also be quite rewarding. Now, it's not the strategy for, let's talk about who this is not for, okay? This is not the strategy that you want to use. This is not for you if you want a high win rate. If you want a high win rate, this isn't for you. Whoops. Or a high win rate. Either one. This is not the kind of strategy that I think you should use if you have problems pulling the trigger. In other words, you're worried about what happened in the last trade, so that's going to affect whether or not you take the next trade. Okay, this is not for you. And finally, this system is not for you if you want to catch a falling knife. In other words, find those reversals in the market and find those perfect turning points. I will show you that it is possible for you to trick yourself when you're trading this system, so that you kind of trick yourself in a way that you feel like you're finding that turning point, because ultimately it does feel like that when you trade this. But this is at its heart trend trading. This is absolutely 100%, no doubt, trend trading style of trading. So if you don't like trading with the trend and going with the flow, if you like to go against the trend and against the flow, then this is most definitely 100% not for you. Okay, so hopefully that's really clear, and that everyone's, that makes sense. If you have any questions about anything, you can certainly post them in the chat box. I'll try to get to them. But remember, it's important for you to keep in mind, it's a low win rate. It's a trend trading system. And if you have problems pulling the trigger, it's going to be really frustrating. Now, those issues with pulling the trigger, as many of you know, I've got a PhD in psychology and research psychology. So I know a lot about thinking and thinking about your thinking, which comes in quite handy with traders. And when I work with traders, there's usually one of two things that people have issues with, and it's all related to confidence issues. But usually it's either the traders have problems pulling the trigger, or more likely they have problems over trading. So they take all these trades all the time. So there are things that you can do to overcome problems pulling the trigger, but we're not going to get into those in this session. We're just going to talk about the system itself and how you can trade it. All right. So let's jump into it. And at the end of this session, if you guys have any questions about the live markets, I'm happy to do that too. Talk about kind of what's going on in the live markets. All right. So let's do that. Okay. So what is this system? What's it all about? What does it look like? How do you trade it? Well, let's talk about this. This system is for if there's any, and by the way, if there's any if there are any markets that you guys would like for us to use, so if there's a particular market that you want us to use as an example, we can do that. I'm happy to do that. But for right now, I'm just going to go ahead and just work through the ones that work through the ones that that I've got here on my charts. Okay. All right. Cool. All right. So what does it look like? How do we know if we're in a trending market? Well, there's a very simple pattern that I like to follow. I like quiet trends. I don't like volatile trends. Quiet trends are easier to trade. Typically, what I'll be looking for is a situation where the market's really kind of going in one direction and just taking little pauses along the way. So here's a good example, the pound Swiss. Pound Swiss has just recently rolled over. One of the reasons why I like the pound Swiss is because a lot of traders are actually going long the pound Swiss. So I like it as a downtrend. And that might seem kind of weird, but if you look at the numbers here, over 70% of retail traders right now are, at least with this broker, and these numbers are fairly consistent across other brokers, if you look, are going long the pound Swiss. That means 29% of the traders are shorting it. This was actually higher last week if you followed it. And I did. And on my form, I post all that. But the important thing I wanted to note here is that it's in a downtrend. And the reason we know it's in a downtrend because the big candles are down, then it has little tiny candles up, then the big candles down. Then mixed candles, tiny, going up, down, and then it goes down. And then little tiny candles up, and then it goes down. And it's just done it again. So it's at the point right now where it's just recently fallen and taken another move down. So this is what I would say about that. This is an opportunity to sell the pound Swiss, right? So we know that it's looking like it's in a downtrend. You can see the big daily candles going down. It's very new downtrend. It's not a more mature downtrend or trend as we've seen in some of these other. If you go to the left here, you can see the markets, like this one's a more mature downtrend at this stage. You could say, well, yeah, it's been going down for some time. Or over here, it's been going down for some time. The thing I like about it is that it's just started. So we also know that we have a pretty clear spot where we might find support because that's where we found support all the way back here. So I like this downtrend. I think it looks really good. So the question is, how do you trade it using this high reward, low risk system? The way that you do it is you wait for a pullback, not just any old pullback, but a really simple pullback where it makes a 8 candle high or an 8 candle low. Now, I'll write the rules up here so everyone has them. Basically, what you want to do is you go like this. Number one is your idea trend, and you find that on the daily chart. Number two is ideally that trend is a low volatility trend, so it's not making wild retracements. Usually, a low volatility trend, the retracements are very slightly against the trend or just flat. They don't even go. So if it's a downtrend, then retracements don't even really go up. They just kind of go sideways. Okay. So low volatility trend is ideal. Because it makes those retracements easier to deal with. And then the other thing is we ignore the Asian session, and I'll show you how you do that. Okay. So to ignore the Asian session, all you really have to do is do this. So what I look for is I tried. So this is the first candle of the day right here, this little white one. I'm looking for at least 8 candles to ignore. Okay, the first 8 candles I'm going to ignore. So it's 1, 2, 3, 4, 5, 6, 7, 8. Okay, so the first trade that I'd be looking for is from this candle onward. Okay, so this candle onward, and then I also actually ignore sort of the last 3 candles of the day too. I don't really want to take a trade over here before it gets to the end. Let's see where this is at. So that's, yeah, so I got to move this over one more. So basically from candle 9 to 20, essentially. That's looking for. Ignore most of these candles here. And the reason why we ignore those is because we want the market to make. So this is a downtrend, obviously. So we're looking for a local high. So in a downtrend, once you've identified that you're in a trend, the second thing you want to do is talk about, here we go. If you're in a downtrend, find local high. And obviously, it's the opposite for an uptrend. You're finding a local low. Show you what that looks like. So what we want to see here is we want to see the market pull back, come up, and print a high, the highest high that we've seen in 8 candles. So for example, this candle right here would qualify as that. Does everyone see how this is? See this candle right here that I've flagged with the blue arrow? This is the highest candle we've seen in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I think it's not as high as that one. So it's the highest candle I've seen in the last, yeah. So it's higher than the high. The high is on this one. The high is 25.61, and the high on this one is 25. So yeah, just barely 1 pipette higher on this little one. Now it also happens to be a kangaroo tail, which is nice, but it's not. It's not a must-have, right? It doesn't have to have a kangaroo tail or a big shadow or whatever reversal. But if it has a naked reversal, that's nice. Okay. And a kangaroo tail, as we know, has a high. Kangaroo tail is an open and close in the bottom third of the candle. The open and the close are inside the previous candle's range, and then the next candle breaches the low of that kangaroo tail to confirm it, which is what happened here. Okay, so we identify this as a downtrend. We identify it's a low volatility downtrend. We don't see some really harsh retracements against this. We ignore the Asian session, which is the first 8 candles here, and then we're looking for a local high. So when the market makes a high, a highest high of the last 8 candles, then the next thing is we have to see a close below the low. Now, again, I'm giving you bearish trend rules here, but you would flip these for a bullish trend, right? We would be looking for a local low for a bullish trend, and we would wait for the market to close above the high of that local low candle. Okay. So in this case, in this example right here from yesterday, here's your local high right here, right? High in the last 13 candles, so it definitely qualifies as a local high, as the highest high of the last 8 candles. Clearly, it is. And then actually the low. So the low of that candle is right here, and it closes below there. Now the number of pips at risk here, the stop loss goes on the other side. I am looking to hook into these trades. Now on the pound Swiss, you might fudge it a bit and push it out a bit, but I'm looking to get in these trades with about 25 to 35 pips risk max. So a lot of times you can get at 22 pips of risk, 17 pips of risk, 30 pips of risk, something like that. And the reason why that's so critical is because I'm looking to make at a minimum a 3-to-1 reward to risk. So I want to get into these candles where if I'm risking 25 pips, I can easily make 80 pips on the trade. 150. That's uh, below that high, below that low. Sorry, it's above the high for an uptrend, but you enter on the close below the low. For example, on this, what you see, right? What you see right here is the local high. This is the highest high of the last 8 candles. And then the next candle closes, right? So you get in there. But remember, the whole point of this is to risk about really about 35 pips max is the risk that we're looking for. Now, this is you can change this. If I'm trading the pound yen, it might be 45 pips. If I'm trading the pound New Zealand or the euro kiwi, it might be 45 pips. But if I'm trading the Aussie, it's going to be 30, 35 pips max that I want to risk. If I'm trading the pound, it's going to be 30, 35 pips max. Ideally, you can get in at like 22 pips. I've seen them as low as 12, right? But normally they're going to be in the 20s and maybe in the low 30s. The reason why we want to have such a tight stop is because we're looking to milk this sucker for a 3-to-1 reward to risk ratio at the very, very least. Okay. If you're not getting 3-to-1, then the numbers aren't going to work, right? Because if you're getting if you're hitting a 40% win rate on these or a 38% win rate, here's the math, right? If you're making, let's say you're getting 38 of these are winners, 38 out of 100, 38% win rate. So you go 38 times 3. What is that, 106? My math is right? No, 101. 90 plus 21, right? 24, 104. Making 104 on your winners, and your losers, you're losing 62, right? 62. So you're losing 1R on your losers. Yep. There's my math. My math is great. So for every dollar at risk, I'm basically making, what is that, $42, something like that. Trades, I should say. So remember, 104 on my winner. That's if I'm making 3-to-1 on average, and I got to get that. You can get 10, 12, 15, but the point is the minimum is 3-to-1. And I usually move to break even when I'm at 2-to-1. Okay. So in the case of a 25 pip trade, if I've got 50 pips of profit, I'll move to break even at that stage. And you can slap a trailing exit on it. You can do whatever you want. The point is, I'm not getting out of that 25 pip risk trade until I make 75 pips minimum, right? That's critical here. Okay, so does that make sense to everyone? So these are the sorts of trades that set up for you on these. Trades like this. This one was a little bit, it was like very, very close. But you can see here, it's about 40 pips. If you can get them 25, 35 pips, it's ideal. Here's another one down here. Let me share this with you. This one. I've been trading the pound a lot lately, but here's another one. So here's your local low, right? This is an uptrend on the pound. Here's your local low, okay? $35 pips. Closes just right on top of the high. 35 pips. That's 160 reward. Okay, 130 I think it was for me, something like that. But this is the kind of stuff that you get, right? Now sometimes it's not going to work. So you see over here, you've got one right here, right? Okay, so you get in right here, it closes up here. Your risk reward, I think, is 39 pips or something like that. It goes about 50 pips in your favor and then stops you out over here. But then you're back in the next day. So these are the kinds of moves that you look for. Now, right here on the pound, it's very, to me, it's very bearish. So I'm looking for local highs on this one. Now, you'll notice that the local high today actually happened during the Asian session. So unless we see a severe retracement, we're probably not going to get a trade on the pound and the pound Swiss today. But that's what we're looking for, right? That's what we're looking for. Yeah. 114. So my math was still off. Thanks, Vincent. Matt, yeah. Yeah. Okay, so let's talk about some of the pairs that I would say, yep, this is pretty good. So obviously, I like the pound Swiss just because everyone's shorting it right now. So it means, or going long right now. So it means it's probably a great time to go short. So we talked about the open position ratio. See how everyone's going long pound Swiss? That means it's probably going to be in a downtrend. It's going to move strongly this week, or at least over the next couple of days down. So I'm looking to short the pound Swiss. I think it's a really nice, looks like a really nice chart. Some of the other pound pairs too actually look pretty good. I think the pound yen gave us something pretty sweet today. Now, this would qualify as a home run trade, right? But the problem is the risk is 100, well, we don't even know. It needs to close below the low. But if this current candle closes below low, you're going to have 130 pips of risk there, right? So that's too much, obviously. Because what you really want to catch are the little tiny local highs. And if this is a downtrend, it's probably just starting anyway with the big bearish move here. So you'll probably have more opportunities throughout the week. So that's fine. But the point is that you got to have a really nice, clean, clear trend to do it. I would say that the Kiwi has been one as well, but there are some signs that maybe, where's my Kiwi chart? Is it on here? I don't think I've got it. Oh, there it is. So see how it's kind of tightening up here? So I see the Kiwi as, this is like what we call a squeeze play. The horizontal level is being pressured by the trend line. The trend line is pressuring it up to the horizontal level, and that's going to break through and go higher. So Kiwi could re-engage an uptrend this week. It kind of just needs to get out of this resistance level, and then we know it's probably going to go at least up to here, right? So that's another 180 pips from where it is right now, or where it will be if it breaks out of that. So that's another one that you could go long. You could go long these if it does in fact do that. Aussie's really sloppy. I'm going to wait on the Aussie. I think the best setups right now are probably the pound pairs. You could look at Kiwi, but remember my rule about having a low volatility trend? This isn't really a low volatility trend, right? This is a high volatility trend because these retracements are really ugly. You'll see them on the 4-hour. See how the retracements are kind of going, whoa, it's going down hard, and then it's making these really strong retracements. That's not the kind of trend I want to trade. I want to trade something a little bit more user-friendly. So the pound Aussie's looking pretty good too as a downtrend. So it's another one that could work. And again, it may just be starting. It may not be at that stage yet where it's it's ready to roll. So are there any questions about the home run trade? This is basically what we're talking about here. We're looking for a trending market on a higher time frame, like the daily, low volatility trends. You ignore the first 8 hours of the day. You wait for that peak high on a downtrend, and you enter on a close below that peak high candle. Does that make sense? You're just capturing the swing. That's all you're trying to do is just capture that swing high. So it's the highest high of the last 8 candles, and then it closes lower below the low of that candle. If it doesn't close below that candle, then it hasn't really confirmed it, right? So let me show you some more examples. Let's look at the Canadian dollar, for example. It's not really trending, so CAD yen would be a better one probably. So let's go back and look last week when the CAD yen was going up, all right? CAD yen's going up, so we're looking for some of these setups, right? Well, you'll notice that here's Asia. Whoops, here. Here's Asia. It's kind of flatlining, and then boom, you get your local low here. I think that's lower than this low. Let's see the low on that one, 86.34. The low on this one, 86.32. So it is lower. It closes above up there. So this one, if your stop loss is below the low, you got about 20 pips of risk on that one. Okay, we'll call it 22 pips of risk. All right, it goes up 32 pips and then comes down, bam, and stops you out right there. Stops you out right there. Then you get another one. Okay. And this one's got about 34 pips of risk, and that one comes good. It goes. So you enter on the close of the candle, that closes above the high, which is right here. Remember, this is an uptrend. So we have one right here that gets stopped out, and then the next one right here comes good. And you can see that on the risk of, we'll say 33 pips, we'll call it 35 pips of risk, okay? Call it 35 pips of risk. You can see on this one, it didn't go 70 pips yet, so I'm still holding on with my original stop on this pullback, and then it finally goes 70 pips here on this candle. So now I'm at break even, right? So my break even stop is right here, okay? I'm going to make that a thick red line to remind me that it's my stop, right? And now, how many pips are on offer? All up, the maximum amount of pips you could have had here was about 130 on 35 pips of risk before you get stopped out over here. So what is that? 130, it's almost 4 to 1. So a little bit less than 4 to 1, so 3 point something. But that's the kind of move that you're looking for, or I'm looking for, because 3 to 1 would put me at 105. So right around in this area would be, okay, I'm thinking about taking profit here. Goes up, comes back down, and goes up again. Other setups, obviously, this day we didn't have any. You can see you don't have an 8-hour low, so you don't have any. Here, I think this would have qualified had it closed higher, but it never did. See, this was your 8-hour low, I think, unless this one's lower. Let's see. 87.62. No, this was your lowest candle right here. Okay, ignoring the Asian one over here. This is your lowest candle of the last 8 candles. 1, 2, 3, 4, 5, 6, 7, 8. Yep. But you'd never get into a trade because the candles subsequently never closed above the high here. So that's why the confirmation is so critical here, because you miss out on some of these where it just keeps going the other direction. Right. So at this stage, if you were looking at the CAD yen, what would you be looking for? Would you be looking for buys or sells? What do you guys think? If you want to trade these and you want to go home run the CAD yen, what would you do? Buys or sells? To me, it depends on whether or not it gets through this level. So the important spot here is this, okay? Is this. It's this right here. Because there's so much support here and resistance there, if it bounces here, then maybe I'll go long, later in the week if we get some really bullish candles on the daily. But if it doesn't, if it breaks through here, then we can definitely short this sucker, right? So we're at a critical spot here, and you can see it kind of showing up on the 1 hour chart where it's deciding whether or not to hold. I think the clearest trending markets are definitely like the pound markets, like the pound Swiss, pound Aussie, pound yen, even. Probably just the pound is a good one too, also looking very bearish. A pound New Zealand. Yeah, those are the ones that I would feel most comfortable going with. You really need a strong trending market. That's the critical thing here. All right, so if you guys have any questions about the current markets, I'm happy to do that. Talk about those from a naked point of view. That's essentially the home run trade in a nutshell. You're not going to trade it if you want to have a high, above 50% win rate. You're not going to trade it if you have troubles pulling the trigger. All of these are kind of, it takes a certain kind of mindset. You got to keep chipping away, knowing that you're going to get blasted on some of these, and then finally you'll hook into a good one. Sell what? AA wants to sell. What do you want to sell? What do you want to sell? Yeah, so the question is, yeah, exactly. So pound markets like the pound Aussie, I'll be home running. I'll look for a home run on the 1 hour pound Aussie charts to sell. On the pound, I'll be looking for 1 hour a home run charts to sell, right? Trades to sell. On the pound Swiss, 1 hour sell setups this week, right? On the pound, we talked about the pound. Now, pound yen, it's a little bit tricky because it's just started. I mean, I don't put a whole lot of value in the Friday and Monday candles, the worst daily candles to rely on. So I kind of want to see some follow through today. But if we do see some bearish follow through, then I'll be looking for possible sells on the pound yen as well. I guess basically the big story with the yen is, we could be on some support here. That's kind of the big story. The yen could be finding, if the yen is finding support here, then maybe the pound yen and the CAD yen are going to go up. But if it hasn't, then maybe we'll see like the dollar yen, the CAD yen, the pound yen fall down. So it's the yen pairs are a little bit trickier to me. To me, the simple, obvious ones are pound Aussie, pound Swiss, pound. Those are the ones that make a lot of sense in terms of trying to find a home run setup. Do you sell pullbacks into those candles? Yeah. So like you're saying, like, let's say for example, you wanted to go long. Like I've been trading the pound long, okay, recently, and now I'm looking to short it. So let's say that you let's say that, okay, here, this is a good example. There's a really simple bullish pattern where the market will give you, this is the pound daily, right? Yeah, okay. Just got to get to where we're at. Okay. So the market will give you like see how the market broke above these highs? Okay. So this spot here, this is what I would call support and resistance zone in my book. It's I talk about these zones where it finds support and resistance. So it found support, broke through, resistance, right? Really simple to see. Now, the critical thing here, I think what you're talking about is, would you get in on the pullback? And the answer is yes. So when the market gave us this pullback here, it was just basically a confirmation of the zone. That's all that was. This is a really bullish pattern. When I see a big giant candle and then either a little tiny candle up at the top of it or a candle like this with a long tail, that's usually trend continuation. That's not a reversal for me. So I would be looking for buy setups from here. So if we put that marker right there, and then we'll go into the 1 hour. I'll show you. Basically, where is it? Where's that marker? There it is. Okay. So here's that pullback day, right? Now I'd be looking for pullbacks again. So here's the other one, right? That's a 31 pip, 33 pip stop loss on that one. Okay. So there you go, right there. This one right there. Boom. That was a pullback into, and that was after a pretty bearish, like technically it was a bearish day, but also it also had a super steep pullback, right? So now if you were going long here, you would have been blasted, right? So you had one home run here, which was about 30 pips of risk. The other one over here is going to be too big. It's probably not going to work. You know, if you were going for a 40 pip, you're okay with 40 pips, which that's really kind of on my outer edge on like a pair like the pound. On the pound yen, that's fine. Or the pound Aussie or whatever, but you know, those volatile pairs, but not on the pound or the euro. I would not really. 35 pips is about as much as I want to go, really. I've gone slightly higher, but so yeah, so there's another one, and you could have gone with that. You know, 40 pips means, you know, you got to wait for it to get 130 pips. You got to wait for it to get up here to actually cash you out, right? As at a minimum, you're looking for 3 to 1. You need these 3 to 1 moves to make it work. But here, this one's much better. And what happens, guys, obviously I didn't mention this, but what happens if, you know, you're in a trend and it's still trending all week, you get a bunch of these entries, you're stacking them, right? So you have these huge weeks where you make all this money, and then you have other weeks you kind of get chopped around, and you're just kind of waiting for these weeks when you've got, like, I've got one here, I got one there, you know, you get another one here maybe, and you get stopped out, but those other two are making 3 or 4 to 1, and then the other two you're losing 1, right? So you make 7R and you lose 2, so you know you make 5R or whatever on the week. Say you missed that candle, would you consider going long again if the price comes back into that area? Well, I use one of my students. He created like an EA, so I don't miss any. So I just turn it on and go to sleep. Because where I am here in Australia, it's nighttime, right? So I kind of set it up and I just go to sleep and I turn it off in the morning. But yeah, so if I missed it, it's hard, you know, like you don't want to stand in front of the screen all day long. But how do I say this? If the entry is still valid and hasn't been stopped out, then yeah. So, but my rule is if the market has gone to the stop loss price, but I didn't, for whatever reason, I didn't get into the trade, then the trade's invalidated. That's always my rule, especially if the market goes to that stop loss price before it goes to the trigger price, right? So that's an important thing too. If the market goes to my trigger price first, and then goes to my stop loss price, then I go, oh, that would have been a valid signal there, and I didn't take it. I'll take it now. No, I won't take it if it hits a stop. So my rule is basically, as long as the market hasn't gone to that stop loss price, I'm happy to, I'm happy to do that, right? Yeah. So that's pretty simple stuff. So yeah, so just to clarify, I think the coolest, the easiest ones to trade would be the pound pairs, pound New Zealand, pound Swiss, pound Aussie, maybe the pound yen later in the week. I also think that you could probably go long the Kiwi. That's one I'll probably be looking to go long. But again, like I said, I really need to see it clearly close above 73. And once it does that, I'll consider this pair still valid, you know, still going higher, right? Yeah. Is gold, now let's talk about your questions, guys. So you want to talk about gold. Let's go to another chart. So I'm just going to shift charts here. And if you have any questions, we can look at them from a naked point of view. I will say this. We do know that a lot of traders are going long gold, right? See how like 71% of these traders are going long gold? I will say that usually gets my attention. Although with gold and silver, because not a lot of traders trade it, it's easier if it's like in the 80 plus, 80, 85. But with normal pairs, it's usually 70, 75 that you want to see. But here's gold. Here's the daily. I like a sell up here. So for example, see how it rolled over here? I actually sold over here off this bearish candle and got stopped out. But then it double topped and came down. It's come back up. I really love this kind of setup when the market comes up and hit your level from below. So this would be a pretty sweet, yeah, this is a 4-hour kangaroo tail. Yeah, that's a pretty sweet setup to me. This is a pretty sweet setup. The reason why it's so nice, guys, is look, if I sell this, I'm risking what, what am I risking? Okay, I'm risking, $5. Let's call it $6. I'm risking $6.50, let's say. $6.50 to make what? To make $15? Like, that's pretty good, right? That's pretty good reward risk, because at the very minimum, I'd want to cash out when it gets down here. So if I'm risking $7 to make 16, I'll go with that. And even more, what's even nicer about this is that a lot of traders we know are going long gold, right? So that means it's probably going to make another big fat red candle down. I would not be shocked if one day this week, in the next 3 days, that means today, which is the 31st, tomorrow, which is the 1st, or the next day is the 2nd. One of those days is probably going to make a huge big red candle. And if you've got a target down there, it's going to probably cash you out. So yeah, I like that idea a lot. Looks awesome to me, Sandy. Great question. Any other ones? Or I think we're almost out of time, folks. If there are any more last minute questions, we can do that. But otherwise, I think we're just about done. So that's the home run trade. I hope that you guys test it. Spend time in Forex Tester going through it, testing it, get your numbers, get comfortable with it. The biggest probably learning curve is just getting used to having them get stopped out, and then also, staying out of the market when you're unsure if it's not a trending market. So you got to wait for those daily candles to really line up and give you a nice trending market, and then go for it from there, basically. Yeah. Thanks, guys. Have a wonderful trading week. Aussie yen, Aussie yen. Okay, last one. Aussie yen, Aussie yen, Aussie yen. I'm gonna do Aussie yen real quick, and then we'll wrap up. Aussie yen is, yeah, this it could have been a double top with this move, but because it's come back up here, this could actually be another squeeze play, like we were talking about on our good friend the Kiwi. So what could be happening here? The more daily candles that keep touching this 87 level, the more likely it's going to break higher. So see how we had these two touches here? If it comes back around and touches it again, it's definitely going to break higher. That's my guess. If, however, it breaks lower than this spot right here, this 85.40 level, 85.40, if it breaks lower than that, then it's probably going to go lower. But my guess is it's probably going to find support here, and it's coming back up, and it's going to try and break higher. Okay, thanks. Take care. Bye, guys. Take care. See ya. Have a good one. Thanks for your time. See you Thursday. Bye.